Hello everybody, welcome back for another video. Hope you're all doing well and that you are all having a great day to start things off. Mike Novogratz, outspoken cryptocurrency investor, CEO and founder of investment firm Galaxy Digital, is commonly known throughout the crypto industry as one of the emerging asset class's most prominent bulls. However, according to comments made by Novogratz at the Economist Finance Disrupted 2018 conference, the longtime Bitcoin bull may finally be turning bearish, at least in the short term. Novogratz, the Forbes-ranked billionaire and former hedge fund manager at Fortress Investment Group, has long been bullish on Bitcoin and cryptocurrencies in general. In the past, he predicted a $20 trillion market cap for cryptocurrencies, and back in November of 2017, right before Bitcoin's price went parabolic and hit an all-time high of $20,000, Novogratz was already looking ahead at 2018. At the time, he claimed Bitcoin could easily reach $40,000 by the end of 2018. However, his new prediction for the end of 2018 falls significantly less than what he had been expecting 1 year ago, before a 9-month-long bear market beat and battered bulls like Novogratz. While speaking at the Economist Finance Disrupted conference, CNBC reported that Novogratz doesn't think Bitcoin will ever reach a quarter of the value of his previous $40,000 prediction. He said, "I don't think it breaks $9,000 this year," offering a short-term bearish view on the number one cryptocurrency by market cap. Novogratz said that Bitcoin had bottomed in September. But despite believing so, Novogratz doesn't expect Bitcoin to break $10,000 until the second quarter of 2019. At that point, Novogratz expects another FOMO, or fear of missing out, rally to occur, driven this time by institutional investors instead of retail investors who helped inflate the last bubble. Novogratz, like many others in the space, believe the next bull run will occur when institutional investors begin to rapidly enter the space. Throughout the year, though, Bitcoin has been unable to reach new highs and has repeatedly painted lower lows on his price chart. Since July, Bitcoin has begun making higher lows, indicating that selling pressure has started to dry up. However, buyers aren't stepping up to the plate either, and the price consolidation Bitcoin is showing is reflecting this. While the lack of buying or selling could be attributed to uncertainty in Bitcoin's next big move, causing investors and traders to remain sidelined until the price chooses a direction, Jani Ziednis, a cracked market analyst, believes it's really due to a chronic lack of demand. They said, Bitcoin is still struggling to break $6,800. If buyers wanted to buy this dip, they would have already jumped in. The chronic lack of demand at these levels is a concern, and the path of least resistance remains lower. This was said by Ziednis, according to MarketWatch. So I was reading something a couple of hours ago, and it was explaining, it was like a chart of sorts, and they were showing exactly how the crypto markets have moved and how long people think the bear market is going to last, and the market cycles and where they think that we're going and how far crypto is going to move. More specific, it was actually geared just towards Bitcoin. It was like a Bitcoin price metric as far as, I think it started in 2011 or something like that, and it was showing where they think we will be by 2021 or something like that. And the forecast, because of how the year has been so far, actually painted Bitcoin's price at around $3,200 within the next year. I.e., I don't know if you've realized over the last couple of months. So Mike Novogratz is already like I think he eats Bitcoin for breakfast. He's like obsessed with it. Well, we had a couple of people who were talking about that they thought that Bitcoin's price was going to hit 25,000, 50,000, and some said 60,000 during 2018. And a lot of them have either taken back their predictions entirely, or they keep modifying it to a lower number. A lot of people have not lost faith in Bitcoin, but they've lost faith in Bitcoin doing anything in short term, meaning from this moment today to at least the middle of 2019. A lot of this has to do with the fact that a lot of people believe that we are not going to see a Bitcoin ETF anytime in 2018, and that we could potentially, maybe if the stars are aligned, the SEC could shine on us, and therefore we would then get a Bitcoin ETF. And this is when people believe that this would actually get moving. What I find interesting as well is that a lot of people have also turned, which I have not fully understood. People have turned bearish even on the New York Stock Exchange releasing or starting their own Bitcoin futures that are going to be physically delivered, which I think is interesting that there was such a huge amount of hype around the Bitcoin futures when they weren't physically delivered. And now that we have news that one of the largest financial institutions in the entire world is going to be launching not only a cryptocurrency trading desk, but also have their own Bitcoin futures that are going to be physically delivered on a 24-hour basis, and yet prices continue to go lower. Depending on who you ask or where you look or where you get your information from, a lot of people think, and I personally think as well, that the November timeframe for when the New York Stock Exchange / ICE / backed thing ends up getting launched, we should, in theory, break past 9,000. I don't think it's that difficult. We did it earlier in the year when we had less people in the cryptocurrency space. I think Bitcoin has enough of all the analysts who are looking at it, they say that Bitcoin is not only already oversold, but that there is a lack of selling pressure, and therefore the opposite of that should be people buying into the market, as the prices of Bitcoin should have bottomed at this point and they should be as low as they possibly are going to go. And the idea is that, my idea and a couple of other people as well, that should this all go off without a hitch, and that November is actually the time frame when the thing actually ends up, even if we just have a Bitcoin physically delivered futures that is launching, every 24 hours, this should logically be pushing the price up. But on the other hand, a lot of people think that it's the Bitcoin ETF that people should be paying attention to, and if we do not get proper clarification as to if we are going to get an ETF rather this year, then prices just won't go anywhere. I think we have been I want to say hoodwinked. For those who do not know what hoodwinked is, I want to say like lied to, or more so like pushed into a really odd corner that we shouldn't be standing in. The idea of cryptocurrencies is worldwide adoption and worldwide usage. And what's happened in 2018 is that we have been told by other newer people in the cryptocurrency space that we should just be paying attention to major institutions getting into the space, really rich money getting into the space, this happening in ETF of futures, and besides that, crypto has no value until they, being rich people, have touched it. And I told you guys before, us, got Bitcoin to $20,000 last year, even if it was just a rage of fear of missing out. It shows what we are capable of as normal investors on the side. So I still think a lot of this is being pushed down. There was another article that I don't have over here because it was relatively short and wasn't like too important. And they were like, is Bitcoin boring? And I read through it because I had to, and they weren't talking about as far as like, slow transactions and do this and other coins that are better, but it was more like Bitcoin's price has moved sideways for so long, it doesn't really make a lot of sense. When you have a worldwide market, if I was telling this to a friend, if Bitcoin was just in Canada or was just in like the States or was just in Greece, and it wasn't a worldwide thing, this would make a bit more sense. But the fact that there's such a huge industry happening right now around the entire world when it comes to cryptocurrencies and also Bitcoin, like I said before, because Bitcoin has the name, that logically prices shouldn't, even if there's something else happening in the other parts of the world, Bitcoin, if there's no people wanting to buy there, prices should be slinking down, or prices should be going up, or there should be some type of actual movement. The movement that we're seeing in the market doesn't really make a lot of sense. I'm not going to spend too much time on the movements. The point is, a lot of people have changed their idea of how high they think that Bitcoin is going to go. In this year, they don't think it's going to be able to pass $10,000 like many people have predicted many times before. I still think November, and I mean, we've gone through this throughout the entire year. We've had so many people telling us when the market was going to move. I think no one knows, and I have never claimed to know. I just give the news, as it were. But I think at this point, every time that someone has said that they think that the market is going to move somewhere, the market actually ends up doing the opposite. But you have to understand where I'm coming from as well, as far as if we had news, even imagine in 2016 to 2017, that we had news that the New York Stock Exchange was going to be trading Bitcoin back and forth. Bitcoin's price would have shot up to at least 17,000 in 2015 had we had some type of information like this. But lo and behold, prices have only continued to sink. And now a lot of the major advocates and or proponents of Bitcoin and cryptocurrencies now believe that 2018 has just been an in-between year, and this is what it will be remembered as. Let's see let's see what happens towards the end of the year. But as of now, it's been just an accumulation year. And I mean, that's not too bad. A lot of people were saying around January, February, and March that they wanted prices to go lower. Well, you got your wish. So hope you've been accumulating and collecting the crypto coins that you wanted because, yeah, prices are good where they are right now. Next up, the Winklevoss twins are in the news. Crypto exchange Gemini has obtained insurance coverage for the digital assets it holds in custody. It said this on Wednesday. The Gemini Trust Company, co-founded by Cameron and Tyler Winklevoss, said in a press release that its insurance will be provided through a consortium of insurers arranged by global professional services firm Aon, which provides a broad range of risk, retirement, and health solutions. According to the release, the exchange received coverage after it could prove to underwriters that it's the leading best-in-class exchange and custodian. Okay. The insurance comes on top of the Federal Deposit Insurance Corporation insured dollar deposits that the exchange holds. That is the FDIC. Gemini head of risk Yusuf Hussein said in a statement that consumers are looking for the same levels of insured protection they're used to being affronted by traditional financial institutions. He said, educating our insurers not only allows us to provide such protections to our customers, but it also sets the expectation for consumer protection across the crypto industry, end quote. The news comes just weeks after the exchange announced it was launching a dollar peg stablecoin approved by the New York Department of Financial Services. Not that important. So it appears they're finally making moves. I can only assume that this was actually going on for at least a year and a half of them trying to receive some type of coverage, as it were, because I'm pretty sure, like I've said before, I think that Coinbase is insured. I think that was one of the stipulations for them being able to be as large as they are now. They needed to go through all the proper channels and make sure that the funds that they were holding were insured. And this is why I told people, especially last year when people were asking what cryptocurrency exchange should they be using, and I told them to look into using Coinbase, simply because, especially if you are in the States, your money is then insured should something go wrong with them. I am under the impression, or I have been told, or rather I saw from them, that you are FDIC insured, and therefore, for those who have never been into the States or have not lived in the States or have never gone into a bank in the States when they were there visiting, if you walk into a bank, everything on every door says it is FDIC insured, and I think their value has been risen to, I think, $250,000, if I'm not mistaken. That happened in 2010 or something like that. It pretty much says any money that you have with the bank, should something go wrong, more or less, you will then be insured and you will get your money back as compensation for what you have lost. And therefore, them getting some type of coverage like this is incredibly important, because along with being a crypto exchange and a crypto custodian, should something happen to their computers, you need to know that you are going to get your money back, because heaven forbid, should you actually have 300, 400, 500 Bitcoin on their website, should they get hacked, everything goes dark, and then we have another Mt. Gox situation that is not going to be good. So I hope that this is a nice step in the right direction. I hope that everything continues to go well with them. I have my own ideas about Gemini. I wish they moved a bit quicker. People were saying before in the comments section, and I guess it does make a bit more sense. I think they're trying to not step on any toes at all when it comes to the entire situation. I think they're trying to be as cautious as humanly possible. Oh, that's really weird. Sorry. I looked at the price of Bitcoin here, and I thought it was almost the exact same number. It's like $6 off, but you notice the price of Ethereum here is like half of what it was there. That's actually quite interesting. Ethereum's had some better days. The point is, they have been insured. This is very great news for those, especially who are living in the States or who have been using Gemini. And I hope that we continue to get more good news, especially about cryptocurrency exchanges, because a lot of other countries have not been very favorable to their crypto exchanges in the last couple of weeks. Next up, proof of work, the consensus mechanism that secures Bitcoin and numerous other cryptocurrency blockchains, has given the technology a reputation for hogging energy. Indeed, a commonly advanced argument is that an army of specialized computers all racing to solve some arbitrary math problems can wind up using as much electricity as a small country. However, scientists from IBM Research, the tech giant's R&D arm, claim to have found a way to reshape and combine blockchain architecture, including proof of work, arriving at what they call in a paper a sweet spot for energy efficiency, scalability, and security. Announced on Wednesday, the discovery stems from applying proof of work to a very different use case, the Internet of Things, and would run blockchain nodes inside the connected devices. The problem they faced is that, unlike specialized proof of work machines, hardware for cryptocurrency such as ASICs and GPUs, Internet of Things devices vary wildly in their computational power and energy resources. After all, Internet of Things is a broad category that includes everything from pocket-sized temperature sensors, that's crazy, to internet-connected automobiles. Okay. As such, all or some of the devices in an Internet of Things network might not be able to solve very complex proof-of-work puzzles. Hence the impetus to make proof-of-work energy efficient, according to the IBM's researchers' paper. They said efficiency in IoT can be defined as an optimal utilization of hardware resources and energy. Therefore, in order to achieve that, the Internet of Things device on the blockchain should optimally utilize resources and energy to maintain and progress the blockchain, end quote. Without reading any further, it gets a lot more technical, and it's not like hyper important. I don't think many people actually care about the specifics of what IBM is going to be doing. We have a lot of people who are trying to look into ways to make not only proof of work more efficient, but this is why a lot of people have been moving over to the idea of proof of stake in order to create new coins, simply because we have a lot of countries who in 2014, 2015 were very friendly to the industry. And now I think Canada, Greenland and Iceland, Russia, I think some parts of China, but I think China might be a different story. And a lot of areas that have like cooler regions and stuff like that, especially in Alaska as well, where you are able to actually, because the mining causes a lot of heat as well. And therefore you want a cooler area to be able to cool your machines. A lot of these countries and companies and cities and states have been telling these people who've been mining for a couple of years to get out, simply because they're using so much energy, or there's a huge amount of noise, or we had something where there's some mining farm, I can't remember, it's somewhere in the world, obviously. Their energy consumption is so large that they're actually draining energy from a nearby city that has like tens of thousands of people, and is causing blackouts in that city because they're using so much energy to mine Bitcoin. At a certain point, I think people will have figured out a way to combat this. Maybe a lot of people don't believe that it should be combated at all. Then I guess the question is, where should these people go? Because a lot of people who have been using, there are a lot of companies who are now trying to find like hydroelectric or wind power or solar powered things. We have a lot of cryptocurrency companies who are trying to open around the equator or in South American countries so that they can get the most of the solar power, or near water and stuff like that, so that they can get a huge amount of the wind power that is generated from the wind, from the waves and stuff like that. This is going to be a problem for quite some time. I don't think Bitcoin is ever going to really move away from proof of work. I think we can only try and make it more efficient, and this is why it's the same exact, they talked about putting it in the Internet of Things devices. This is also why we've had news a couple of weeks ago, or months at this point, of people trying to put Bitcoin miners in heaters and washing machines and televisions, inside of phones, like having full nodes and stuff inside of it. But anyway, let's see exactly what's going to, I give it 3 years that they'll actually figure out something. I think people care, but I think people don't really care. Not saying that they should not care, as more in like, I think that people, if something doesn't immediately affect them, I feel like people just don't care. That's the easiest way of kind of saying it. But anyway, let's move on from this. Yeah. Next up, this is exactly what we've been talking about for a number of months. Manhattan's first major asset to be tokenized on the blockchain is a luxury condo recently valued at $30 million. The East Village building contains 12 condominiums, each with 1,700 square feet. That's about 170 meters squared, and each now tokenized on the Ethereum blockchain. The real estate property is now represented with a sum of tokens available for purchase on the blockchain. A token represents a portion of the value of the property, allowing people to invest in luxury condos, even with a small investment, something which was previously very difficult, if not impossible. Best-selling author Ryan Serhant brokered the deal and favors tokenization as a viable, modern financial method. Ryan Serhant, for those who don't know, he had a TV show called $1 Million Listing New York, and it was pretty much a TV show about him listing $1 million properties. It was very dramatized and stuff like that, but the money that he was making on doing it is absolutely insane. Speaking to Forbes, he said, "The market in New York is always strong, but it can take some time to sell for the right price in a new constructed building. With blockchain tokenization, we can remove the unruly pressure of traditional banking finance, which is much healthier for the project and above all for the stakeholders. Tokenization is paving the way for a new forefront in real estate development," end quote. Digital assets firm Propeller partnered with tokenization specialist Fluidity to tokenize real estate, and the firms will continue to collaborate in the future. Propeller is a FINRA registered broker-dealer and will use this experience in capital markets to sell securities, both traditional and tokenized, under Reg D Rule 506C, because why not? Fluidity, on the other hand, offers tech services to broker-dealers and other financial institutions dealing in tokenized securities. The partner company of AirSwap, Fluidity ensures that Propeller can accept fiat payments in exchange for securities in a way that is legally compliant. Without reading any further, I am elated that this is already happening, and I hope that this continues. We were talking before about the tokenization of everything and how everything eventually is going to be tokenized. And this is, I assume they're doing it with a very large property in order to showcase the uses and show that it is not just for lower end property, because everybody needs to see something. Everybody wants to see the king on the top of the mountain to think that they can also climb up the mountain themselves. When this ends up picking up steam, and I hope that it does, we're going to have a very different world of investing. A lot of people have been asking me questions about investing in real estate and stuff like that, and some people were even asking me like what the future of investing in real estate is. This is pretty much it. When we have a situation where it is difficult for a lot of people to gather the funds, let's say $250,000 and or euros, to be able to invest in property. Sometimes after a year or two of saving up, you may be able to gather around 20,000, 25,000. Imagine being able to buy just 1/10 of a condominium or of a home that you are then getting paid for every single month, even though you weren't able to fund it's kind of like a what's it called, like a timeshare, but not really, kind of, because most of these I assume would be used as like investment properties and stuff like that. But this is very interesting that this is already happening. I assume we had like another year or two for the entire security token thing to kind of launch and take off. If this is successful, if they end up selling out the entire building, this is a stipulation, if they sell out the entire building with this tokenized blockchain so-and-so, this is going to spread like wildfire throughout the entirety of New York. New York is very like not even heard it through the grapevine. Like, people listen, they see exactly how much money you made, they ask you casually, how did you make so much money, and then they go and do the exact same thing themselves. If this picks up within the next 3 or 4 years, I think we're going to have a huge amount of the world that is going to have stuff like this, and this is going to be absolutely wonderful for people who are looking to diversify their portfolios and not even getting away from crypto, but more like insuring or hedging against other things. But yeah, I saw this, read it, and I thought it was absolutely amazing. I hope that this continues. I hope that this is successful. I definitely think it will be. I don't see a reason for this not being successful, especially when a lot of people are trying to get into real estate. Like I said before, you may not be able to gather $500,000 in funds, but after a couple of years of saving up, you might be able to get a fraction of that, and that'll buy you definitely a nice place that you will definitely be then getting money from every single month when it's rented out. It's kind of awesome, and I love stuff like this. Last up, Augur is in the news today. People want to use Augur. If only they could figure out how. The decentralized platform for prediction markets based on real-world events launched on the Ethereum blockchain in July. Since then, it has generated excitement beyond the usual crypto circles due to its perceived potential as a trustless, uncensorable platform to bet on sports, forecast elections, trade derivatives, and hedge against risk. But as venture capitalist investor said in a recent interview, Augur's biggest pain point is user experience. This means that following a brief honeymoon in which Augur attracted a flood, 300 people, to use the website, the platform's daily active users count is now below 100. One would-be user even reached out to CoinDesk for guidance on how to get started on the platform, have gone to the project's website and found it was not user-friendly at all. The developers behind the project, who are technically affiliated with the non-profit Forecast Foundation, recognize Augur's user experience problem. As the foundation recently revealed exclusively to CoinDesk, the upcoming version 2 of Augur will include a number of improvements to the platform's inner workings, which are meant to alleviate sources of clunkiness, confusion, extra costs, and risk. The end goal in the foundation's operations-led Tom Kaiser is said to be a better, faster, cheaper Augur. The post emphasized that the changes will be tentative up until all the code is written and audited. Holders of Augur's rep token will need to migrate to a new smart contract if they want to upgrade, but version 2 will be backwards compatible with the current version, according to the post. It says somewhere around here as well. Okay, what it comes down to is that as it is built on top of Ethereum and people have to... So the Ethereum's growing pains and stuff like that are now affecting the other things that are built on top of them. When everything on Ethereum uses gas, and if the Ethereum network is clogged up, you have to raise your gas limit manually, which is another huge issue that a lot of... I think there's an issue right now where developers are not designers. And I mean that in that when you use an app, when you download an app, when you look at something on your phone, you may not know it, but you're using that app or that feature because it is visually appealing to you. And a lot of the people who are creating these things aren't worried at all about how the app or DApp looks on your computer or on your website. And you look at it, it doesn't look appealing, it looks ugly, and then you stop using it. And they're not really focused on one end on trying to make these things. They think that there's going to be adoption simply because people are as intelligent as they are. They see the use cases for such a platform and then they end up using it. Wow, this is wonderful, this is great, but that's not how the real world works, because everybody, whether, like I said, you know it or not, you use the things on your phone because you find them visually appealing. You like to look at it, you like the colors. And this is why you also play certain games that you also download as well. It's because of the colors and you like the interface. It looks very nice to you. And on the same exact end, a lot of things that have been built, especially on Ethereum and by Ethereum and a lot of other cryptocurrency projects, they don't understand that when you go to a supermarket, you swipe your card. When you go buy a latte at Starbucks, you take out money from your wallet, you throw it on the counter or whatever, and you walk away. You don't want to, if there's a backup in the Ethereum network, you don't want to go through the settings and stuff like that and increase the amount of gas that you have to then pay. Imagine if you were trying to buy something with Visa or MasterCard, there was a backup in the network, and you had to manually go into your phone and increase the amount of fee that you wanted to pay so that your transaction could go through, so as you're buying some milk and bread. That's kind of what it's like. The same exact thing when CryptoKitties was like a major thing. I remember I think I made a video about it. I tried to actually use the platform so I could actually see exactly how it worked. And I think I saw a cat. It was like the equivalent of, it had to be like 2 or 3 euros or something like that. So like $3.10. And I tried to buy it and I couldn't because I had to manually change the amount of gas myself. And every time that I tried to raise the gas limit, and it showed you how much the gas was actually in, it was like a US dollar conversion. It was like $15 or something like that. And I was like, I'm not going to pay $15 for a 2 euro cat that I don't even really want. I was just trying to, be a part of the network and see exactly how the platform worked. This is part of the problem right now. Everything relies on gas, and this is why we see a huge amount of people who are backtracking on Ethereum, who no longer believe in Ethereum and who have moved to other platforms, even like Tron or even like Cardano or even EOS, because when you have free or excessively cheap transactions that people have pretty much worked out the bugs from everything that Ethereum's going through, this is a major problem. You can't... No one wants their stuff built on top of Ethereum. If Ethereum gets clogged up, your token gets clogged up. And especially imagine if Ethereum doesn't actually have any type of scaling for the next 2 years. Who's then going to use your platform? Other platforms on the Ethereum platform then end up getting the worst part of it, because if they're not as popular as Ethereum, and they're trying to get off there, get off the ground and get launched. And they started out with around 300 users, and now they're below 100. What then happens for these projects? On the same exact note, as far as they've cleaned up the website a lot. It did not look like this before. I think you can find older photos if you look through Google. It looks a bit more clean. Give them time. I understand, things take, whatever, things don't happen overnight. I got it. But I think Augur was being worked on for at least a year and a half, if I'm not mistaken, in its entirety. A lot of people, they just don't get it. And I wonder why they don't hire designers to make things look pretty. Part of the problem also was quote unquote, for Augur was as well that instead of the point of Augur was to be able to bet on things, bet on sports bets, bet on this is going to happen. I think this person will be elected. I think this is going to work. I think this is not going to work. I think we will hit Mars by the year 2030. People were betting on assassinations and stuff like that, from the second day. And it got really intense because people started being like, this is going to happen on this day. This person's going to be shot in the head while they're eating a burger. And it just kind of got completely out of control. And then the Forbes and Bloomberg were talking about it, about how, we should not have platforms like this. And that kind of, I like Augur. I like the idea behind it. A lot of people, I think, have lost faith in Augur. I mean, when the market has gone down and no one's really paying attention to your product. I mean, I think the Augur token is also not the cheapest token in the world right now, if I'm not mistaken, especially for what it does and the lack of actual use of it. Let's see if they actually get it together. I think we have a couple of other prediction platforms, if you will, that are floating around out there. I think Augur is probably the most well-known, which is kind of crazy because they have less than 100 users. I mean, it'll all be worked out eventually, but I feel like the earlier projects that we had in the cryptocurrency space, they're almost becoming not archaic, but not even growing pains. They're just really slow and they're not going to be updated for a long time. So projects that have launched on top of Ethereum and it's taking them, Ethereum, a long time to be able to update and stuff like that. You realize you can actually go into CoinMarketCap and you can do the historical prices. So you can actually see the top coins from this time exactly last year, the top coins from this date in 2016, so on and so forth. You can see that the coins have changed a lot, and a lot of them you will not even recognize what they are anymore. The market is changing rapidly, and the older coins are, I think, going to have a very hard time keeping up, especially if we do have something that ends up picking up the market. Whatever might end up happening, I think a lot of the newer coins are going to see a lot more attention, the ones that can scale and stuff like that. And I wouldn't be shocked if at some point, or even right now, if the Augur team has been discussing moving over to EOS or any other platform, simply because of the entire gas situation and all the other things that have been plaguing the other apps that have been built on top of Ethereum. All right, everyone. That is definitely going to do it for this video. Hope you all enjoyed. Hope you all are having a great day, morning, afternoon, and or evening, wherever you are, wherever you might be. Thank you once again for watching and or listening. Don't be too down. I know we have some bad days where we get news like this and stuff like that. But I mean, it's more, I think it's healthier to be realistic as opposed to wishing and hoping and dreaming every single day that the market is going to go back up. Just let it do what it has to do. Eventually, we have so many more millions of people who have moved into the cryptocurrency space. It's going to move at some point. It's more just a matter of when. So yeah, don't feel bad. I don't know how to end that sentence. Thank you all once again, and I'll talk to you all soon. See you.